Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Welcome to another edition of Top Stock Picks. I am Brian Mullen, and I am the Aggressive Growth Stock Strategist, and I'm going to give you a stock pick for the week, and then Jeremy Mullen's going to give you his. Let's go ahead and get started with mine. Mine is Meridian Bioscience, and that's VIVO as the ticker. It's a Zacks rank number 2, and that gives it a buy. I see a B for growth and a C for value, and you know I'm all about the growth. So I love to see a strong growth score on anything that I do, but obviously for this one, it's not imperative, but it is moving here. And we see the stock down a little bit here today, but let's go through the whole reason why I like this one, and why it is a Zacks rank number 2. We can see that the earnings beats have been very solid of late. Big beats, average, positive, surprise here, 89%. That's great to see. Estimates holding still, though, for this quarter, 6 cents. And the Zacks rank only looks at the last 60 days. So 6 cents for next quarter. Holding still for the fiscal year at 29 cents. And holding still, again, at 35 cents for next year. And you'd say, Brian, why is this a Zacks rank number 2? I mean, it's a number 2. It's a buy. Why? That should tell me that earnings estimates are moving up. But what we've seen in this pandemic and in the market crash and everything is that earnings estimates are coming down for the majority of stocks. So just holding still will get you a number 2, and that means moving up. Very few stocks are moving up, so that's why very few are number 1s. Let's take a look at the valuation here. You are paying up for this one a lot. 62 times forward earnings, only 14% annual growth, and that gives us a big price to book of over 3.8. 3 is price to sales too, and margins a little kind of up and down here. But the story really is about what's going on with this, and this is one of these stocks that is developing testing for COVID, and we can see this stock has just gone straight through the roof here. That's a big arrow up. It's come in just a little bit yesterday. Outperform at William Blair. That's the WB. If you don't know William Blair, they are a outstanding brokerage here in Chicago. They have it outperform. Home Run Investor liked this stock somewhere around in here and still likes it. We like this stock over 20 in the coming weeks. So I think it's a great thing. It's one of these plays that makes the testing equipment, the testing stuff for coronavirus, COVID. So that alone keeps it in the news, keeps it a hot stock, and something that you should consider for your portfolio, especially on the pullback like today. Looking at down 3% here. That's quite a bit. All right, next up is Jeremy Mullen. Let me throw it right over to you, Jeremy.
Thanks, Brian. And for my top stock pick today, I'm going with Xenix Medical, ticker ZYXI. Xenix is a Zacks rank number 1 strong buy that is a medical device company which is up over 150% on the year. The company designs, manufactures, and markets medical devices to treat chronic and acute pain. Now, Xenix has seen a lot of momentum in the pain management arena as both doctors and patients are searching for an alternative to opioids. Their devices have no side effects, they aren't addictive, which makes Xenix crucial in the fight against the opioid epidemic. I'll go straight to the quote from CEO Thomas Sandgaard to articulate why I discovered this company to be so important. And I quote, currently, the devastating impact has reached the level where tens of thousands die yearly due to opioid abuse. We continue to develop more tools and make physicians aware of our technology that literally has no side effects. Our products for pain management and rehabilitation still stand out as some of the best products in the industry that makes way for pain management, end quote. Now, obviously, that's a real nice social thing they're doing here, but there's obvious demand, so they're making a lot of money. The key is getting products in front of doctors, which I'll talk about in a little bit. And also, people wonder nowadays, is it COVID-proof, especially in the medical industry? Obviously, March and April were a rough time, and doctors had other priorities, but they didn't have a big downdraft on sales. Sales were still pretty good, and going forward, we'll look at the fundamentals. We'll see that things are really looking up for Xenix. Getting the fundamentals, recently the company maintained the 2020 guidance and guided Q2 above expectations. In addition, they're adding sales reps, which helps them get in front of doctors and patients. This is always a positive sign in the medical device industry to see this addition of sales reps. Looking into the numbers and into that earnings report, we see Q3 orders are up 126% year over year. Device revenue is up 74%. Gross margins are 78%. Analysts are loving the high recurring revenue model, which is producing 60% plus. The company has a $70 million market cap, no debt, $15 million of cash. And all this positive momentum is causing analysts to get super bullish. Estimates for the current year have gone up 11% over the last month. And that was a move from 36 cents to 40% for the current year. Okay, now let's look at the chart and the technical part of the stock. As you can see, last year we kind of based in the $8 to $10 range, choppy trade, hanging around the moving averages. The red is the 200, the blue is the 50-day, and the green is the 21-day, okay? So what we saw in February is a nice breakout, a break above the previous highs. And in late February, we started to see sell-off into early March, like with everything else. So we created a nice low, got back above the moving averages. And so what I like to do is draw a fib from high to lows, a Fibonacci retracement. We got this 61.8% level. We broke above it, and we started going. What happens when we break this level? It gives us targets above, 161.8, 261.8, targets above. We've already hit that first one. So some investors don't want to be chasing this, right? It's a 150% move. So let's kind of look at levels where we could come back and maybe you could buy this stock. So the 200-day is probably out of reach, but the 50-day at 1350 is possible. And this 21-day, this is momentum. I would be watching this if we do have a pullback to get into. In addition, if I draw these lows to highs, we see this retracement area between 16 and 17. That's where I would be looking to get long for further upside. If you're afraid of missing this move, I see no problem getting in here as I have targets up at 27. Maybe build a core position in this $16 to $20 area for a larger move higher. Okay, thanks, guys. That's my top stock pick for the day. We'll see you next week.